Here are three things you need to know right now. Hopefully this will put you in a good mood. It's already September. If you can believe it, the summer rally lost its steam in August with U.S. stocks ending their month with their fourth straight day of daily declines. Let's take a deeper dive into the action we saw over the past month. And August started off pretty good, Brad, all things being considered. And then the bottom dropped out of the market in large part caused by concerns about what the Federal Reserve may or may not do on rates. But that Jackson Hole speech by Fed Chief Jerome Powell still sits very prominently in the minds of investors.
Yeah, August was, of course, a poor month for stocks. But then you think about what some of the catalysts were and what are some of the key things that we can take away from it. Number one, we know that there is no Fed pivot. Do we need to repeat that?
No mas.
Folks out there?
No
because
pivot.
That seemed to be one of the major narratives that was being sold by some of the different banks out there, some of the economists even predicting that the Fed would somehow step off the gas. That just was not the case. And Fed Chair Jerome Powell only took 8 minutes to put that to sleep, put that to rest. And so after that, you saw some precipitous declines actually be initiated because the markets had this sense of, oh, crap, OK, well, now we're out of position. We're not actually pricing in the aggressiveness that the Fed is going to continue to maintain. And so instantly, some of that sell-off that took place late August and now permeating into the start of September. What's critical about this is that August was also a low month in terms of volume. You've got a lot of traders that are off the desks, taking vacations leading up to the Labor Day holiday weekend, of course, which is taking place this week. You get an abbreviated trading session next week. All of that considered, even some of the mega cap tech names had actually seen some precipitous declines at the end of the month. And I was taking a look at the average daily volumes versus the August volume just to get a good sense and a picture of where for some of the mega cap tech names like Tesla, Amazon, Google, and Apple, and even Nvidia, where that racked up. On average, you saw a little bit more than 10% lower daily volume versus the average daily volume during August versus the broader kind of full scope of what this year has held. And the only outsized part of that was actually Nvidia. And here's why. Nvidia came out with a warning even ahead of their earnings, and then they reported earnings, both of those events in August. And then to cap it all off, to end August, you saw even more of what we're about to dive into in a little bit on the chip sector and how even from the CHIPS Act all the way through to where shipments are going to be allowed to go, how that continues to be in focus among the investment community right now.
Yeah, that Nvidia trade and a lot of big cap tech names, that trade completely got blown up. But here are a couple things I would say we learned throughout the month of August here. Many things. One being that you had leadership at these big cap tech companies really under fire for not getting the job done. Again, we also learned that Fed Chief Jerome Powell is not a friend to the market. And if he sniffs out any thought that there's going to be a Fed pivot, to your point, he's going to come out and stomp it out. Now, having said all that, we are, in fact, now in September. We have another Fed meeting, September 21st. That is when the rate decision will hit. Certainly watching that as well. Going to be watching what we hear from retail. Goldman Sachs Retail Conference will be at next week. I'll be tracking comments from retailers at that as well. Here's some things on that list. Goldman Sachs Tech Conference, Yahoo Finance also will be at. We'll be looking to see what companies are saying about layoffs or more potential layoffs. Return of Salesforce's Dreamforce, something to watch. And then again, from a macroeconomic perspective, throughout August, gas prices really have continued to fall. Can they go lower? Can they go lower ahead of the holiday shopping season? And that's something to watch.
Yeah, and just as we're thinking about the consumer side that you mentioned, I'm glad you bring that up, because what were some of the themes that we took away from all of the spate of retail earnings that came out? It's that forthcoming now, and they're foreshadowing some of this retail discounting that's taking place. We're also seeing the shift in how consumers are spending. You're seeing more of consumers tapping into credit for not just the discretionary items, but also for some of the necessities as well. And they're seeking out deals in a massive sweep right now, but also even on the large part of combating inflation. Home sales right now, continuing to keep an eye on how people are looking across the housing economy right now. You're seeing less bids, lower builder confidence. All of that rounds out this broader theme of inflation that the Fed is going to have to tackle, that consumers are feeling right now. And for the consumer relationship with some of the businesses that we've been discussing, that's why it's impacting their ability to even protect margins or their propensity to even go out to investors and say, yeah, we still feel confident about growth. They don't right now.
Well, lower gas prices, they have not, positively influenced Gap and Bob Martin. I told you I'm going to mention him every single day, at least once, every day.
Somehow.
Every day.